Fellas, you know Degree Cool Rush deodorant, right? Well, last year they changed the formula, and guys were mad about it. One dude even started a petition. So guess what? Degree heard us, admitted they messed up, and brought the original Cool Rush scent back exactly how it was. And it's in Walmart, Target, and other stores now for under $4. So grab some and remember why its cool, crisp, and fresh scent made it the #1 men's antiperspirant for the last decade. Degree Cool Rush is back, and it smells like victory for all of us.
Hilton brings you new ways to stay, with experiences that let you capture the glory days. Introducing the Graduate Hotels. Each inspired by local college towns, these stays are always original and never boring. Get in touch with traditions all across the country and enjoy a stay that's a class above the rest. Book at Graduate Hotels with Hilton Honors Points at Hilton.com. It's a win-win. Hilton, for the stay.
Hello and welcome to Fintech Insider Insights. My name is Brear. I'm the Group CEO here at 11FS. Today I'm joined by Ian Rand, who is the CEO of Monument Bank, a pioneering digital private bank designed for mass affluent individuals. Ian took the helm in 2022, bringing extensive experience from Barclays to lead Monument through a period of pretty amazing growth, it has to say. Now with over $5 billion in customer deposits, an ever-expanding customer base of mass affluent and high net worth individuals, the future is looking pretty damn bright. So I am very excited to dive into what are the key ingredients behind Monument's success, find out a little bit more about Ian's background, and understand a little bit more about what he thinks the future of high-end banking really is. Ian, welcome back to the show. How you been?
Very good, thank you, David. It's been very busy, but all good fun.
Well, I'm very busy since last time you were on the show as well. I sort of was saying just before we got into recording, the last episode you were on for Fintech Insider stand out as like one of my favorites. It was, you were back at Barclays. We did an after dark in level 39, wasn't it? And it was Valentine's Day.
Valentine's night, yeah. Yes.
Got pretty special. I mean, all of us explaining why we were not spending Valentine's Day with our loved ones was quite an interesting one, but it was good fun nevertheless, wasn't it?
It was great, yeah.
And obviously, I mean, you're at Monument now. I'm very intrigued to sort of learn a little bit more and understand the sort of transition, how you found. But for anybody who doesn't know, who hasn't been following the press, tell us a little bit more about Monument to get us going.
So Monument was stood up to basically cater for the mass affluent clients, the ones who were used to be looked after by the premier propositions at the major banks. And really, what we've seen over the last 10, 15 years is the premier propositions at the big banks have been really devalued. They're not much more now than words on a card. But at the same time, the wealth businesses, the Coots of this world, who also used to go into that space, have moved their thresholds much higher. So you've really got to be a high net worth or ultra high net worth to bank with those private banks. So Monument's there really to cater for that middle sector of clients, the mass affluent, who have some really unique needs. They do have money, but equally they've got a lot of complexity. They will be tending to worry about more things than are catered for by the traditional bank offerings. So it was stood up. We were fully licensed to run at the end of 2021. I took over in January 22. You're right. We at the beginning of this year, we had grown to $5 billion of deposits. I have to say, we've just broken $7 billion.
Wow.
Over the last 4 months. So the growth rate really continues. And what we're offering at the moment, we're very focused, I would say. We're offering principally savings products at the moment via a phenomenally high performance app, really slick onboarding, great experience, but also very clean. And so we're focusing on the deposit products at the moment, but also we have a membership proposition, which we can talk about a bit later. And we're going to be moving into more spaces like planning and investments, to offer services really targeted on that mass affluent client base. I should also say that we do all of that with a tech stack, which is really quite unique in the market. And actually, last year we stood up Monument Technology Limited, and we're currently working with our first client to actually use our technology with them.
Fantastic. I'll come back to the technology bit because there's a whole hour of conversation we kind of can have in that one. But I guess in terms of that target audience, then maybe sort of sticking with that for a little bit. But so you've said mass affluent. That's because the wealth space is huge, isn't it?
Yes.
When you talk about ultra high net worth or high net worth, or so we're not talking marble floors and koi carp end of the spectrum yet. We're talking the sort of mass market wealth, essentially.
Yeah, we're talking about mass market wealth. People who have got probably around £100,000 plus of savings, investments. We're talking about professional services people, accountants and lawyers and doctors. We're also talking about retirees. So we have quite a lot of people, clients who are at that stage in their life and worrying about their planning, but also we have younger entrepreneurs, quite a broad spectrum. But it's at that spectrum where you've got enough money that you need to think how to deploy it well. That's kind of the defining factor. But also you're not well off enough or you don't want to pay for someone to do that for you.
Sure.
So you're in that middle ground.
Yeah, and I guess traditionally this is the territory, as you say. It's the nice guy with a briefcase who used to come and visit my dad, right? But actually the reality today is this is all digital. So you talk about your technology capability, you talk a lot about the digital nature of the business. It's quite hard to create wealth experiences in a digital world.
It is more challenging, and traditionally this proposition from the big banks has really just consisted of, as I say, a different color card, and then discounts on airport lounges, technology insurance, and AA membership type thing. And what we realized, and talking to a lot of this client segment, is they do want something different. They are interested in concierge type services. So they're interested in experiences in hotels and so on, and they're looking for people to help them plan and execute on that. But also they're looking for just a service level that is different to what you're seeing today. A great experience. The digital experience. You're right. It is mainly delivered. Almost all of our banking experiences are delivered digitally, but not all of them. And I think what we're increasingly seeing from all the major banks is a very kind of what I call an ungraceful degradation of service. So if what you want to do can be done digitally, it's really good. And it's done brilliant. You want to make a payment, you set up your direct debit, that's all there. That's just bread and butter. It's all there and it's fantastic. You want to open an account. Sometimes it's good. Sometimes you still need to send a photocopy of your passport, but generally that's pretty good. The difference is what happens when your life gets complicated. And it doesn't need to be that complicated. Recently I wanted to open a joint account, and I went from open a sole account in 3 minutes to make an appointment at the branch for 2 months' time to open a joint account. Well, that doesn't work for people. So what we're doing in Monument, yes, it is digital, but also it's backed up by a phenomenal service level. So we have, a UK-based call center team. We aim to answer, 90% of calls, within 5 rings. It's really, really fast. We're being very busy. We don't always manage that, but that's our target. And it's and so we get clients who will come to us for a great rate, but actually they stay for the service. They stay because they've lost their phone and they want to do something just complicated, and they want to talk to somebody and get that sense of service and safety that comes from actually being able to pick up the phone and talk to somebody.
Yeah, it's an interesting sort of the pendulum, as you say, swang so far. And I know this is a predominantly digital banking podcast, right? This is predominantly what we do, but the pendulum swung so far that way, taking sort of people and paper and all of this out of the process. But ultimately, people want service, don't they? We sort of say it's pretty ironic. It's putting the services back in financial services is kind of important.
Yeah.
But when I saw the appointment, I was like, actually, this makes a lot of sense because for me, and we've done a lot of research in this space in terms of the mass affluent or all the way up the sort of spectrum. Your background with business banking makes so much more sense than a transition from retail banking to wealth, because businesses are much more akin to wealth, given all of the complexities of life. And like I say, it isn't the sitting on the back of a massive yacht people. It's actually just a scale of wealth where the complexity of kids and property and all of these things become almost a strain on traditional banking. So your background with Barclays and business banking must be a real help.
You're absolutely right. And as I was talking with Monument, the comparison jumped out at me more than I expected it to. Because you're absolutely right. If a business just wants to execute, if they just want to run payroll, great, they can do it digitally. Those services are all there. But when you actually bank businesses, you learn that they actually also want to talk to you. They want to sit down with somebody who has looked after 20 other garages. And so when they talk to you, they can help you understand what else you could do. And exactly the same is true, for the mass affluent. And I think, one of the things that, you talk a lot about on the show when we talk about wealth and investments is the advice gap, and Monument is not in that space at the moment, but we're building the client base and building, a deposit base that gives us the license to talk to those clients about what else should you do with your savings. I mean, our average balance for our clients is around £60,000, which is unbelievable.
Yeah.
I mean, I don't think you'll find another bank in the world that has that level of, or certainly a startup bank that has that level of average balances. Well, if you've got £60,000 of cash with Monument, well, first of all, we take that trust incredibly seriously. But also, I kind of hope you're also thinking about your pension and your investments. And so, as Monument continues to build, those are the spaces that we will go to, because it is more complicated. If you're talking about advice with a small a or financial planning for the mass retail market, generally speaking, it's, well, let's see how much you earn, let's see how much you spend. Generally speaking, you can't change how much you earn that much. So it's all around, well, how can you save a bit more money? Did you know how much you spent in Starbucks this month versus last month? Let's help you and give you the information to make good decisions. When you start talking to the mass affluent, the decisions are far more complex. There's much more discussions around transfer of wealth, about inheritance. It's about big decisions that are affecting people right now, and there are problems that people are struggling with, and they don't know what to do, and they don't know where to get that advice. And critically, I think for Monument, it's important we are building a brand and a membership and a collection of clients where we earn their trust to then give us the license down the line to have those conversations. And yes, we'll give them as many tools as we can digitally to help them. But at the end of the day, some of the complexity will need them to talk to somebody. Maybe that'll be a Monument person, maybe that will be a partner. But there will be, it's digitally first, no question at all, but always to have that relationship there that you can go back to.
Yeah. I mean, it's an interesting point you make there, and with a balance so high, I mean, that's amazing. I mean, there's investment organizations that have been around for a lot longer who have much lower balances in that sense. And most of the challenger banks around the world have got a fraction of that balance, right? So how have you unlocked that? Trust is a very broad piece, but this is almost the absolute secret sauce.
Yeah.
Like, what have you done to make that happen? Because putting £2,000 in a Revolut account is one thing, but £60,000 as an investment into a relatively new business, that's a pretty impressive step to take.
So I think really it comes down to a couple of things. The first and perhaps most important is focus. We've not gone out there to start with 30 different products. We're not out there saying you can do your crypto, you can do mobile phone, you can book hotels with us. We've said we are focused on the mass affluent, and we are a really safe home for your savings, and with a membership proposition that you can choose if you want to, that you can be part of. But the whole look and feel, the whole brand feels right for the mass affluent client. So we attract that level of loyalty. We obviously have offered good savings rates. We've rarely been the very top of the market by any real margin. But clients have come to us. But we have a minimum balance, but it's way lower than 60,000. And so we were surprised actually how big, and actually it's grown as well. A year or so ago, I think our average balance was more like 50,000. So what we've seen is as we've grown the number of clients and our overall balances, people also are holding more with us. But that's it's partly the brand and the loyalty we've built. It's also because we have delivered a lot more products. So on the savings side, so we were out there. First of all, with term deposits, and then easy access. And then very quickly we learned that clients were looking for notice accounts. Well, we didn't launch with notice accounts. But the beauty of being a small, very nimble, agile organization, well, 11 weeks later, we were live with notice accounts. Not something that would ever happen in a larger bank. So we've kept delivering. We've kept iterating. We went live with ISAs earlier on this year. We've just gone live with ISA transfers. That's given us a whole new world of balances as well. So what we're seeing is clients come to us for good rates. But they stay and they grow with us for the quality of service and the range of products that they can take with us.
Yeah, I mean that's again an amazing trajectory on building trust and building a business and everything that goes around it. I mean, you touched there a little bit about 11, 12 weeks later, you've got a thing. I mean, I worked in a big bank for 6 years. We might have just about had the meeting about that that thing that you might want to do 6 months, whatever, from there. I mean, you've worked in lots of different organizations with different cultures. You've been at JP Morgan. Before you that, you were in the army, UK Army, weren't you? British Army, and obviously Barclays. How have you found the cultural differences in what you're doing now with Monument?
Yeah, it's really interesting. You can imagine I get asked this question a lot when people see the transition, particularly from, I guess, sometimes from folks who are in big banks and looking to make the change. There's a couple of things. I mean, the culture, the culture I experienced in Barclays, and certainly the culture I tried to create. I may have been running, a very large business, with 1 million customers and 2,000 or 3,000 people, but you try and make it feel like a collection of small businesses. So to a large extent, that kind of culture was not that different. The difference, though, I think really is about priorities. And for me, I'm not one of those people who kind of throws rocks at the big banks they've come wrong. I don't think the big banks are dumb. I just think they have different priorities, right? So to use your example of product development, if you sit in a big bank and you over the last few years and you've got this great idea and you say, look, give me £1 million and I'll build this product. So in the first year, I'm just going to spend £1 million. In the second year, I might make £500,000 of revenue, but in the third year, I'm going to make £3, £4, £5 million of revenue. Typical kind of product business case in a big bank, right? What happens when you actually have that conversation? Well, what happens is that at some point, someone turns around and says, well, I could do that, or I could use that £1 million to close a bunch of branches and write off, all the expenses. And then I'm going to see an immediate, guaranteed positive to the P&L. That's not dumb. It's not wrong. It's just a different set of priorities. But the result is that those processes, you've just not got the processes in place to build that fast. Whereas, in a small institution, first of all, you've got the agility and you've got the decision-making capability, but you just don't have those competing priorities. I think the other thing is around complexity. And it's interesting, as we've grown in Monument, you already start to see some of this appearing, and you've got to be incredibly focused on not letting it slow you down. But if you've got one deposit product and you decide that you want to change the price, it's really simple. You just make that decision. If you've got 5 deposit products, well, if you change the price on that, how does that affect the price on something else? And you can see how in a large organization, you can very quickly get tied up in those kind of putting a whole world of bureaucracy around those kinds of decisions. And at Monument, we've been incredibly focused on making sure we've got very clear decision-making processes and agile and very clear accountability and responsibility for people to be able to make those decisions and move fast. And that's really served us incredibly well.
Yeah, I guess going back to your point around services as well is like when you're in a big banking organization, and I experienced this myself, is there's a lot of financial instrument tweaking, to your point with rates and structures and those types of things. But in what you're building with Monument, you're building a service across those things, which that has all of the hallmarks of a software business as much as it does a financial services organization. So, by design, you are needing to be sort of at the, not agile by reading the book, but fundamentally starting from that place, right?
Absolutely. And, the majority of our colleagues are technology and product people, and that's exactly the way it should be. Whilst at the same time, always recognizing that you are a bank, and therefore there are certain things that you have to do as a bank, and you have a regulator, and you have a board. And so guess what? There's a bunch of things you do have to do. But how do you do those incredibly efficiently is really the key to it. But yes, you're absolutely right. You've got to make it feel always, not just make it feel, you've got to make it act like a software company the whole time. And I think that and what so one of the big questions always is around talent and people. And I think one of the things that's really interesting about Monument is we are not, just a group of fintech people or a group of ex-bankers. We're a real mix. And, that prompts some really interesting debates. And I love the discussions where our colleagues will say, who have not got a banking background will say, well, why can't we do it like that? And, and I make sure that all the bankers in the room go, listen, and answer that question. Because if you can't answer the question properly, there isn't a good reason why we can't do it like that. And so constantly challenging ourselves, but also at the same time, you've seen some of the neobanks over the last few years have kind of, fallen into a few bear traps. There's certain things you've got to get right. And so I think there is a real advantage also with having, some banking experience in the room. If you've ever had to remediate, a product that's gone wrong and reach out to a bunch of clients and say, I'm terribly sorry, you're never going to want to do that again. And so, you can be very focused on your controls and your governance whilst at the same time not allowing them to slow you down.
I guess the approach you're taking to the market as well kind of helps that, though, because you used the word membership earlier on. Your members, you're thinking about your, I'm going to use the word customers now, but you're thinking about your customer group in a different way in terms of the feedback you're getting. And my frustration when I was at a big bank was I know what to do. I'd spend 99% of my time convincing people what to do and 1% doing it. It feels like your world is flipped now, and you're 99% of the time making things happen, and 2% because you're working even harder on the conversations and the agreement. Essentially,
you're right. And look, the best bit of any company of any description is always, I think, talking to your clients, listening to your clients, hearing your clients' feedback. And you're right, we are so close to our clients. We have a Slack channel where all of our customer service team will post any conversations they have with clients. Hey, a client has said, why can't the app do this? They tried to do this, it wasn't clear. Or a client just loved this. We went to ISAs. I mean, it was always a reasonably obvious journey for us to go onto ISAs. We went into ISAs quicker than we planned because of the client feedback. We had clients who were coming to us saying, we would give you more if you could just do this. So yeah, it's great to be so close to the clients. And we look at all of our Trustpilot, all of our app reviews, all of those are shared across literally the whole team. So that gives you that kind of laser focus. And I think that is hard to do in a big company. You can try, but it's much easier in a smaller business. But also when you are focused on that segment, I mean, even in we talk about mass affluent like it's a singular segment, but of course, the approach to their savings and the rest of their life of a retiree is very different from somebody in their 30s who's just inherited £100,000 from their parents, and you have to reflect that as well. And I think that's where some of the other app-based, technology-based banks, by trying to cater for everybody, we're already seeing, even in that segment of mass affluent, how do we talk to people in different ways and in a way that they want to? And that focus, I think, is very unique to us. And I think I think it's always important that you have in your strategy, you've got your North Star, but I kind of almost more think of it as your guardrails. We're not going left and right of this. We are always going to be laser focused on the mass affluent, whether we're taking that internationally, whether we're focusing on that through technology, that's where we can do it.
Sounds good. I feel like this is probably a good time to take a quick break. We're going to be back with you very, very shortly to learn about what's going to go on for the next charge for Monument.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alica Bank, who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.
Llévate más de lo que esperas todos los días con el nuevo McValue en McDonald's. Ahora puedes comprar uno y sumarle otro por $1. Así que cuando tu equipo favorito enfrenta a sus rivales, enfrenta tus antojos con $5 Meal Deals. Y si estás corriendo para alcanzar el desayuno, corre al app para llevarte ofertas antes del cutoff. Tú decides, y con McValue, tu decisión siempre rinde más. Precios y participación pueden variar. BOGO $1 válido para un producto de igual o menor valor. Debe estar registrado en Rewards para ofertas en el app.
Welcome back to Fintech Insider Insights. We're in conversation with the UK CEO of Monument, Ian Rand. Before the break, we took a quick look through what Monument's journey has been so far. We're now going to be looking at what the future plans are. Where does Monument see the future for wealth services really heading? We talked a little bit about the mass affluent space and really the changing needs of what they want. I mean, you talked just before the break of almost the different types of customers that are there. I mean, this is something that traditionally, I guess, was managed by people, in terms of that smoothing over all of those complex financial terms and everything that went with it. I mean, how does that factor into a predominantly digital space? Or are you seeing people still playing a large part in this?
So I think there are lots of different routes here to reach these clients, and flexibility is going to be absolutely key. As we said earlier on, you've seen a lot of the more traditional private bank style wealth managers move up because they've got a very expensive model, right? You can't have a private banker on call that you can speak to about every problem and only have a couple £100,000 invested with them. Commercially it doesn't work. But equally, it's very hard to do it all digitally. Right now, you're really just talking about execution. So you've already decided that you want to put some more money into investments. So you go to any number of platforms and just be able to say, okay, fine, can I put £10,000 into a FTSE tracker? Fine, great. Maybe with a little bit of risk overlay. But it's not. It's execution. And the problem that I don't think anybody has solved yet is how do you bridge that gap between the full-on advice and financial planning and execution for the mass affluent. As I say, for retail, pure retail, it's kind of easier because it's more of like, what are you going to do instead of saving this money? How much can you spare to put alongside your cash savings? But with the mass affluent, we are talking about lumps quite often. You're talking about somebody's first bonus. You're talking about inherited wealth. And what they're looking for can be quite different. If you're talking to a retiree, they are looking for safety. They want to know it's still going to be there. Equally, you're talking to somebody who's just inherited. Often they're looking for safety. We had a client interview, not that long ago, where the abiding sentiment was, I can't mess this up. I've been given this money, and it's for my family, my young family, for the next 20 years. I can't mess up this money, but equally, I know that I can probably do something better than just put it into a bank account.
Yeah. Well, weirdly, it comes with an emotional attachment, doesn't it?
Absolutely.
It's like, my mum worked hard for this, or my dad worked hard for this, or whatever, So the responsibility with that money is quite significant, isn't it?
Yeah. So that's where we get into an interesting space around planning and advisory. And I think there's a lot of folks working on this at the moment. There's a lot of folks talking about it. There's a lot of discussion around how AI can help. But we've not really yet seen anybody land a proposition that is really helps this. And I think for Monument, you'll say we're very focused right now. We're building our client base. We're out there talking. From our previous interactions, I'm a big fan of partnerships. I'm not a big believer that you build everything yourself. You would have seen recently, we've just been out on with our partnership with Firenze on Lombard lending. Yep. Really unusual partnership again. But a fantastic business and great to be working with them. And we are out talking about to others in this wealth space. How can you supplement or replace what somebody used to do by maybe going to St. James's Place or walking down the road to an IFA? Yeah. But they're not getting comfortable with either the costs of that service or the quality of that service. And you have to believe that that AI can play a big role in understanding people's situation and helping them think about, even if it's a what if analysis and things like that. But I say it's almost quite surprising at the moment. We haven't really seen anything that blows us away. We've seen some really nice kind of almost sort of online spreadsheet based planning tools, which are a lot better than they used to be. But even there, how do you factor in all the variables about what could happen and scenario planning? So,
Yeah.
I'm really excited by it because it is a gap. Nobody is doing it at the moment well, or really at all. So I'm very excited to see what we can build there with partners and ourselves.
Yeah, I mean, it's an interesting space when you start looking at to something like a Lombard loan. I mean, you only start to know they even exist when you get to a point where they might be relevant to you, and even then, it's a bit of a mystery, isn't it? So the amount of information that's out there, people can Google, sure, but actually knowing something's relevant to your circumstances or knowing you've got assets that might be relevant, it's a bit of a fallacy that if you've got money, you're good with money, right?
Completely. And, Lombard is really interesting because one of the missions I think that we have at Monument is the democratization of the wealth business. So there is a whole bunch of services and products which, have only ever been available to you if you are ultra high net worth. Concierge service is one of those. We now offer that through the app. Right? You want to see if you can get tickets for Chelsea Flower Show or Oasis. You want to get medical, so we can do online GP appointments and things like that. That's all there. Okay, it's all in the app. But also, there were financial products. So Lombard lending, in case any listeners aren't familiar with it, is simply the lending against predominantly a stocks and shares portfolio. We'll simplify it to that. And that's always been something that, if you're ultra high net worth, you had £10 million portfolio, you could borrow, £5 million against it. Well, hang on a second. Why was that? The answer was because it was quite a complicated product to operate. It needed quite a lot of paperwork. You needed to be able to put some kind of wrapper and security around those stocks and shares so they didn't get sold because they were being used as security, etc. So all of that was basically admin and bureaucracy, which you had to pay for. So in order to pay for it, you had to have a big ticket size. You had to have a big loan. Well, if you can replace all of that process with technology, then the ticket size can also come down dramatically. So my sort of poster child example for this is, a whole bunch of the mass affluent will have been investing in stocks and shares ISAs. Why wouldn't you? Good product to have. If you're going to hold stocks and shares, why wouldn't you hold them in an ISA? So you're going to have a bunch of folks who have been doing that over multiple years, and they've probably got 70, 80 plus £1,000 in a stocks and shares ISA. Okay, you now decide you want an electric car. You walk into one of the major car manufacturers. I was about to name the one I went into the other weekend, but I won't. But it's a major high-end manufacturer. Their used car finance rate is 11.5%. No negotiation. That's not, certainly not these days, but that's it. Flat rate, 11.5% finance. So what are you going to do? If you want to buy a second-hand £60,000 electric car, what are you going to do? You're going to pay if you've got £60,000, great. But what's your better option? Would it be to pay 11.5%? Or would it be to actually take a loan secured against your ISA portfolio that was probably going to be, no more than 3% over base? That's a good deal, right?
Yeah.
Now, that's only just becoming possible. Firenze, great business, do the wiring and the plumbing to fit all that together. And we've now done our first loans via Firenze with that. So I think there's some really exciting stuff coming. Unitized private equity might be another one. So there are some really interesting places that we can go to democratize these products that have up to now have only been available to the ultra high net worth.
That's amazing. I mean, because as you say, it is a democratization and almost expanding out both ends. It's expanding out people's awareness of what products might fit their needs, but equally, there's a whole new customer base for those types of things as well, isn't it? Digital, the sort of always-on nature and the access to different data sets, that's quite a unique opportunity, isn't it?
It is, but also the point you make there around education. And I think one of my experiences has been, new products and services are always harder to talk to clients about than you think, because it's easy. Everyone knows you can walk into a car dealership and you just sign the form and, you pay your monthly fees and you're done, right? Great. When you start talking about people about something new and different, you have to take them on that journey. And that again comes back to your point around digital versus digital and human. Do as much as you can digitally, do all the execution digitally. But at some point, you might just have to talk to somebody about it and get them comfortable to get them over the line. But you're right, the availability of data here through open banking, some point we'll get to open finance. That's a bit of a bugbear of mine. As soon as we need to be able to get People need to be able to share much more information around their pensions, around their investments. Then a lot of these services can be made available to them. I mean, it's crazy at the moment. We still can't even get ISAs through open banking. That's because it's not a required product.
Yeah.
Well, that's mad, right? You really ought to be able to do that. So I think that really we need to just not lose any pace on that, because the benefits to the consumers of all descriptions are huge if we can just keep going down that journey.
Yeah, it's perversely it's happened in the wrong order. If you look at the first thing any great branch manager used to do was sit down and ask you where everything was. And actually, that's more important in the wealth space, to make sure that actually you're doing it in the right way, rather than the retail space, isn't it? In terms of, to your point earlier on around Starbucks, it's relative of triviality of the impact of it. It's much more impactful if you get it wrong on the other end, isn't it?
Yeah, but it's also really interesting when when we look at the partners. So we have, as part of our membership proposition, you are able to connect up. Not just your current accounts, but mortgages, loans, credit cards, investments, house property, all sorts of stuff. So it's really great to be able to see that picture and see it move over time. But what's really interesting as we go through that is to see who has voluntarily created the APIs that allow us to do that. And of course, in some cases it's required, like for current accounts, but in other cases it's not. But what's really interesting is that folks are realizing that this is actually a win-win. You're not giving away your data. What you're doing is you're joining in an ecosystem, right? Because once you're part of that, it will start to be, well, if I can't actually see this data, in this place, I don't want to have my investments there. If I can't transact through a third party and come in and out of these investments, I don't want them there. And some folks are seeing that, some folks haven't seen it yet.
Well, like you say, often people pick a product, but they stay for the service, right? So, that service becomes the thing that you use every day, isn't it? But I guess on the, we often, people get dragged into, digital's sort of a younger person's kind of aim, as in, millennials with their apps and da-da-da-da. But I guess with, we're seeing money changing hands quicker than ever. That's not necessarily down to young people, right? Where partners being lost, and people inheriting within a marriage or whatever setup from a relationship perspective. I mean, I've seen this firsthand. My dad had a great wealth manager. Had no relationship with my mum at all in any way, shape, or form. When my dad died, the first thing my mum did was take it away from that person. So the relationship part of this and new audiences being brought into it, it feels like digital's kind of like the primary point for everybody, isn't it? Not just younger people.
Oh, 100%. I wish I could remember the age of the person, but we had a client who wrote to us and said, this is how old I am, and I cannot believe that I am completely comfortable doing my banking with you. Which is just wonderful, right? And that's what you see, and that's where again we're being so focused on the design, and we all credit to our design team and the how rigorous we are and not allowing lots of other stuff to be kind of thrown into the app and keeping it really, really clean, so that people just feel like it's a place where they want to hang out and spend time and see and look at their wealth and manage their money. And I think that works really well for this demographic. But I completely agree. It's we have the debate a lot. We don't have a website. You can't we have a website. Sorry, we don't have online banking, which is again it's a choice of simplicity for us. And at first, I have to say, I thought I might sort of press that and change that track. Actually, we've not really seen it. If it was a very low cost just to duplicate, you might think about it. But it does add complexity. But we've not really felt the need at all. The app is, you're absolutely right. Not just digital, but app digital has not been about just being pure app has not been a barrier to us at all. I think quite the contrary. It's allowed us to focus on the quality of that experience above all else.
Very good. Where does this go to then? Obviously, I know you're not going to be able to tell me, don't give me your details of your product roadmap just yet, but I imagine you've got a raft of other products you're looking at. You've got expanding out into other areas. You touched a little bit earlier on. You said other geos, but I imagine you can't tell me too much detail. But where do you want to get to? Because, you've done the great Startup 101. You've picked a beachhead. You've absolutely nailed it. You've acquired a bunch of customers. This gives you the ability to solve more of their problems, right?
Yeah. So first of all, we are one of the big differences, I think, when you're focused on the mass affluent is you don't need to get really, really big. I say 7 billion is big, obviously, but that 7 billion. Because that's a mix of direct clients and aggregator clients. We've got around 85,000 customers. So we don't need to do 1 million customers. So our strategy, I'll also tell you what our strategy is not. Our strategy is not to get 1 million customers, then say, look at them, we got 1 million customers. We lose money on every single one of them, but we'll work that out later on, right? That's not our strategy.
Sure.
I'm not throwing rocks at others, but and also, frankly, that model probably doesn't work these days.
Yeah.
There was a day, you've talked a lot about, funding for fintechs and how that environment has changed. It has changed, right? And so there is a lot more investor focus on the ability to deliver, profitability. So there's no doubt about that at all, and demonstrate that. So we're very focused on what we're doing today, first of all, and doing that really, really well. And getting really close to that profitability line, so that then all the capital that we raise and the investors that we're talking to, we can deploy that into, into growing our asset book. And we haven't talked much on lending, but I think there are lots of other places for us to go on a lending for our customers, but also for us to then start that product development, okay? And I do want to make sure that we do that brilliantly. We have a very low appetite for just trying something. We've got to experiment. You've always got to experiment, but I don't want to have kind of 20 things in the app and then we'll see which ones we're going to keep and which ones we're going to kill, right? We're very agile in build, but we're very considered in design and thinking and testing, and talking to our customers. So I think it'll be remaining laser focused on that mass affluent and building out that proposition, both from a savings perspective, a lending perspective. I do think we can fulfill the lending needs of these customers really, really well. And then, better than they are aware of, which I think is incredibly important. We've got Monument Technology Limited, so continuing to grow that. And
what's the particular plans around that? Because obviously you guys are building the technology to support you, and the idea is that you can use that technology to support other organizations as well. Is that organizations within your geographies, or is that broader than that?
Well, so our first one, and we're public with this, so we can talk about it, is the first client is Ecology Building Society. What we've done is, and it's quite different, you'll have seen other neobanks do this, but our or spin off a tech co and a tech stack. I think our approach is quite different. We rather than sort of saying this is our tech stack that we use to run Monument, take this, that's it.
Yeah.
We have an incredibly flexible tech stack. It's one of the things that attracted me to Monument. We effectively have an orchestration engine that sits in the middle, and then we can plug into, we use Mambu today for our core banking platform, but whoever we're using for all the different engines, and then this orchestration engine manages all of that. So if you want to change one of those components, it's relatively easy to do.
Yep.
It's not trivial, but neither is it a 3-year program, right? You can because all you got to do is change the way it talks to the orchestration engine. So what Steve Britton, who's the CEO of the Monument Technology, is doing is talking to customers and saying, look, we can do really simple things for you, and if you want to plug in something else, if you've already got something that works for you, great, you can plug it into us. And so it's a much more helping them on the development journey, and our sweet spot is really the moment smaller banks and building societies, particularly those focused on deposit taking. Maybe they don't even have an app today, and how we can help them at a relatively low price point to build those kinds of capabilities. Now, we've had that traction already in the UK. We've also had interest globally. So we've got a bunch of investors, both actual investors and some who talk to us, but they would come and say, well, we actually love you, but we'd love to use your tech as well. And so that's one of the reasons we stood up Monument Technology, is we wanted to be able to say, of course you can, and here we go.
Yeah.
So we're having conversations, very broad conversations around the use of that. But then we've also had investors who are talking to us about how they can partner with us, and whether it's our expertise, whether it's our brand, because the mass affluent is a generally underserved segment globally, right? So it's very exciting, to see what else we can do there and to continue those conversations.
It's amazing. I mean, all of the pieces have come together in an amazing way. You've got a technology capability that's got a nice low cost of serve. that is a major inhibitor for the big incumbent organizations to compete with you. You've got great balances coming in, both in terms of the aggregate scale and the unit scale from an individual, and you've got a great service offering in terms of what you do. I mean, you must be loving life right now, right?
I'm really enjoying it. It is really great fun. I mean, again, some of our statistics, I talked about 60,000. My other favorite one is cost of acquisition. And our time to get back cost of acquisition for clients, it's about 4 days. So it's a great business. It is a great business model. We were cited by Sifted as the fastest growing fintech, in the UK, which is fantastic. But also, the team is phenomenal, and we've got a great client base. So I think it's not been the easiest environment. Let's be honest. We've been doing this through some pretty choppy waters. But one of the big advantages, I think, of being, I use this analogy a lot. We're a small ship, relatively small ship in some choppy seas right now. And on the one hand, you might feel you're getting buffeted by the waves more, but on the other hand, you can navigate around them. And if you're smart, you can surf them. And that's what I see us trying to do. That's my visualization to the team. It's like, sometimes it feels like it's pretty stormy seas, but let's be smart and we can surf those waves.
Well, that's an amazing story, and I'd love to talk to you more and more about this as the more milestones go. I think probably during the course of this, you've probably hit another billion in terms of the balances coming in. But definitely come back to us and talk to us more about it. But we're going to have to wrap up, I'm afraid. So thank you so much to everybody for listening and joining in with the discussion today. Ian, where can people learn a little bit more about you and all the great stuff you're doing at Monument?
Well, you can find Monument at monument.co, and you can find me on LinkedIn.
Very good. As always, you can find me over on LinkedIn. Thank you so much for listening, folks. If you like what you've heard, follow the podcast and don't forget to leave us a review. It helps us make it better and helps other people find the show as well. As always, if you do want to join in with the conversation, you can find us on pretty much every social media channel. Just search for 11FS or Fintech Insider. Or if you want to, email us on podcasts@11fs.com. Thank you very much for listening, everybody. Goodbye.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alica Bank, who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.